You ready? You
Hit
got
me.
60 seconds. 60
60 seconds.
seconds.
All right. So I can make a show out of it.
Yeah, yeah, yeah. You've got 60 seconds to come up with the worst trading strategy you can think of. Describe how you would lose as much money as possible as quickly as possible. Go.
I would trade really high volume so the commissions add up.
Uh,
I'd keep buying, selling, buying, selling, buying, selling. Um, yeah, no, it's a really interesting question to force a loser. You would want to, maybe I would snatch, if it starts running into profit, I'll take profit really quickly. If it starts running into a loser, I'd let it run. I'd basically do the opposite of what you should be doing. And I
yeah,
would
yeah.
do what people tend to do anyway. I'd do the kind of thing that feels natural. Yeah.
Hmm.
Yeah, it's an interesting question. And it's kind of related to a lot of traders are one of the first things I'm going over 60 seconds now. Maybe
It's
the
okay.
short bit is done now.
Yeah.
That was the short. A lot of traders, they think like, oh yeah, I'm losing all the time. And they have like a brainwave. Why don't I just do the opposite of what I've been doing and I'm going to win all the time?
Yeah.
But that doesn't seem to work either, does it? It's it's not that simple.
No. But what's interesting about your answer is, first of all, it was about commissions, fees, and then it was about risk management or trade management, risk management, because obviously stocks and profits. So it wasn't about when you buy or sell, it was about how you do it and how you manage the risk, which I think is correct. I mean, there are probably
Mm,
ways you could
yeah.
you could enter just before you could send a market order just after a huge piece of new, like a big economic event is released, like I don't know, FOMC, Federal Reserve, whatever. You just enter a
Yeah.
random market order, you're gonna get slipped, you're gonna get chopped, and but everything I could come up with when I thought about it was, like you say, just trade without a stop and trade too long. Like it's not. It's all about risk and trade management.
Yeah, I love the question actually, thinking about it, because it does get to the core of it, doesn't it? And it's nothing to do with TA or oh, I'll buy the moving average, the 50-day moving. No, of course not. It doesn't matter. So
No,
it kind of proves
no,
that TA and strategies is not that important. It's a really
yeah.
I like it. It's kind of flipping it on its head because all the time we're trying to find how to win. We're geared around how to win, how to make money, and we're thinking there's some kind of secret sauce in the market or something we can get out of it, but. No, it's just about not doing those things to how to lose. Yeah,
Yeah.
it's a good question. Did you think of that yourself, or did you copy that from someone? I'm
No,
impressed.
well, I mean, I don't. It's probably been asked somewhere in the world once before, but I thought of it like a few weeks ago, and I forgot to ask you when we did the first recording
Yeah.
because I wrote a bunch of shit. I keep writing something called "Everything I Know About Trading," which is supposed to be everything I know about trading.
It doesn't take you long.
Let's see. No,
Yeah, it really does all come down to risk management and discipline, and yeah, the holy grail of trading is consistency. Like I've talked about that before, and it sounds so boring and it's such a cliche, but I really think it's true. And I don't know. I think consist people don't understand what is meant by consistency. I mean, it literally means kind of just doing the kind of same thing over a period of time.
but it's got to be more than that, right? Because like in your video, you said if you drink every day and you trade, then you need to drink and trade so that you remain consistent. But if you're doing something bad every day, you're consistently not using a stop loss, then how does that figure?
No, but you learn from it. That's what I'm saying. If your
Mm,
strategy is to get really drunk and trade, and it works somehow, what you're doing is working, then keep doing it. It probably isn't going to work in that case if you're getting wasted and trading. But if you and then you change it, and then so you say, okay, I've drank 5 beers and now I'm trading. That's not working. I'm going to try trading now with 1 beer. But then you have to be consistent with the 1 beer. That's what I mean by consistency. It's a stupid example, trading when drunk. But
mm,
that's the idea. Is rather than like one day, today I'm going to trade out a breakout. Now I'm going to trade a reversal. Now I'm going to look at volume. Now I'm not going to look at volume. I'm going to look at this. I'm going to look at that. If you're constantly jumping around, that isn't consistent. So it's kind of related to that Einstein quote that I told you before. It's like the definition of insanity is doing the same thing over and over again but expecting different results. It's kind of that, but on its head. It's like doing
Yeah, doing
different
different thing every
things,
day and expecting
doing
what?
same result.
This,
Different.
yeah,
I don't know, it's kind of
but
related to that.
yeah, but doesn't it? I mean, well, yeah, George Soros speaks a lot about that, like the scientific method. That he's one of his teachers was Karl Popper, that apparently invented falsifiability, which is interesting. So basically, Soros said, "I made all that money trading because I'm usually wrong, but when I'm wrong, I lose so little because I test the market. And the only way I can understand that is he just must use price. He's a macro trader, so he uses like central banks and whatever economic indicators. But then he says, I test the market, right? So how is he doing? Surely the only way he can do that is if his bias is long, he buys, and if he gets stopped out, then he considers himself wrong, and he keeps doing that until his hypothesis plays out. I'm sure that's the only way you can do it. So it's just a different way of coming up with a setup, but the actual kind of execution is still the same, like a entry signal and then stop loss.
Yeah, I mean, who knows what kind of system or approach he uses. He might hedge and he might have multiple different assets, instruments, and I don't know what he does. But yeah,
Yeah.
it's I think it comes down to when you, especially when you're new to trading, you get because I think in life, like if you're trying anything, like if you're trying like learning to play football, I remember as a kid in the park. And
Mhm.
I remember it vividly actually when I started hitting the ball with like kind of laces to get power, like on the bone of your foot. I was like, oh, that goes a lot harder like that. I don't know, I must have been 5 years old or something. I don't know. When I first started kicking a football around the park. And I remember thinking, oh yeah. And then so you kind of you learn, don't you? But if it doesn't work, you try something different. You think, oh, okay, maybe I'll try it like this, or maybe I'll try it like that. Um, but with trading, you don't do it differently. You have to stick on the same thing. That's what I'm trying to say. Like because there's so many variables involved, and it's not about being results oriented. It's about being process oriented.
Listen, I kind of disagree a little bit about, I mean, football. I don't think it's the best example because for me, trading, it's almost like every day you go and try and kick the ball with your laces to get the best um, power, but every day the ball changes size, and then the field is a slightly different material, and then the weather, it's like every day it's a completely different game. I know you kind of disagree, but I really think in the long term, like, you could, let's say you are consistent, you're trading breakouts, but then for some reason, there's no volatility for a few months, and something, it could be for any reason, who knows what it is. Like, people have theories like at one point there was no volatility in the stock market because central banks were like suppressing whatever the idea is, but it's a reality and you're trading breakouts consistently, but there's no volatility, so you're not making any money. You're just consistently losing money. I do think that markets actually change. Like they always have the same fundamental truths, especially because they're fueled by human emotions, but humans are so changeable, like, because it's the one thing in life, emotion, that is just impossible to predict or read or
Well,
or
you can't be
analyze in
perfect,
many
but
ways.
that you have to try to. That should be your goal, I think. You can't obviously cut out all your emotions. Just try and do your best. Like in poker, what what you do is you try and minimize your mistakes. That's it. That's all you can do.
No, but I'm talking about the emotions of the market itself,
Okay,
not
yeah.
yours, the collective emotions. So you could, like, what, I don't know, what if, for example, like, I don't know, Russia attacks the US tomorrow, and suddenly everybody's emotions in the market will be totally different, and you don't have any data for that. How are you going to trade that volatility and
Yeah,
whatnot?
this is maybe where we do differ a bit. Like, I don't know, I kind of get what you're saying, but I also think when you boil it down, the market mechanics stay consistent across fundamentally a market is the same whatever you put it in, whether it's a housing market whether it's a tulip market, whether it's Bitcoin, whether it's made up of people that will have a collection of the market will be offside and in trouble. A collection of the market will be in profit. A collection of the market will be on the sidelines. So every market participant is in different scenarios. And a catalyst comes along like a war or something and shifts that dynamic, but there'll still be those three groups of people, onside, offside, and flat. And depending on this, I think the structure is hugely important because that kind of defines where people have become offside, maybe potentially. So this is what I've.
Now, the reason I disagree is because obviously this what I agree with is that there's always going to be drivers. Right, okay, like the housing market as an example. Of course, there's fear and greed, and that's eternal, like in all markets. Like if the country you own a property in has, I don't know, there's a war there, then of course the property prices are going to go down because there's less demand. People are fearful, they want to leave, they want to sell, so they're kind of like panic sellers, right? But there's still different drivers behind that market. There's the economy, there's the currency that it's priced in, there's many different factors. So you can't trade head and shoulders or whatever on a housing property, I mean, a housing market chart because it doesn't make any sense. Like there are different drivers. The only reason it works in finance because it's like kind of self-fulfilling prophecy. Other people are looking at that.
Housing market is maybe difficult because it's not a two-sided auction. You need, and there's only one asset. Like there's only one house. You can't sell multiple houses of the same house, if you know what I mean. Like you can't. It's not
But you
fungible.
can have houses in the region. In a way, it is. There's like parts of a city. They all have the same kind of tax bracket, whatever, you know.
It's better to have like a unit of something like tulips, and they have a set value
Okay, well,
or whatever, or
okay, well,
stones,
but like
limestone.
wine market, they have the same
Yeah,
bottles, the same grapes,
yeah.
the same year, but it's still. I looked at it. There's no chart patterns. It's not. It's totally different. People don't trade it the same way.
But is it as liquid though? Like,
It's wine.
but you can't. If you buy 100 bottles of wine, you can't easily just at the click of a button offload that
You
to
can.
someone,
That's the point. There
or
are online
or can you?
exchanges where people are trading wine at the click of a button.
Yeah.
They're in storage in London. There's some kind of tax treaty, and they're buying and selling mostly French wine, and they're in a warehouse in London. And there's an order book and there's charts, but they look more like the chart of a housing market. Like they seem to either go up or they don't they don't have support and resistance and they just kind of like gradually go up kind of thing. So there's a
Well,
different
maybe
driver
so.
there.
They kind of just appreciate over time, right?
Exactly.
I mean, like,
But some people believe the stock
I,
market is
it's,
like that. Like I have a friend who owns stocks just because over time they appreciate it. That's his whole thing. That's his whole thesis.
stonks go up.
Yeah.
Yeah, I don't know. I don't know anything about the wine market, and I haven't
Yeah.
looked at any of the charts. But I would. I'm surprised to hear you would still like if you had a load of people that bought a bottle of wine A at $500 and the price suddenly went to $1,000. You'd have a lot of participants in that market that are in profit now, right? After an up move. So in a normal market in a chart, you generally get profit takers in that scenario. Maybe the wine market, they're they're less speculators. They're more just
Yeah.
kind of collectors, or they just want to long term invest. They're not day
Exactly.
trading the wine market because otherwise they would be offloading that quickly. They've doubled their money, but they maybe just have confidence it's going to continue to go up because it's such a rare quality wine. I don't know.
Well, yeah, I think a lot of rich people use it as a way to, what's the
Yeah,
word? Like it's like an inflation
reduce,
hedge.
minimize tax as well, or I don't know.
Yeah, yeah. And also
Maybe I
collectors,
don't
like
know.
you say. So maybe the conclusion and the only reason there are moves in any market is because of leverage.
Leverage and a lot of speculation, a lot of day trade, a lot of short term traders. Um, yeah, is it the length of time that causes You'd still get profit taken, but taking, but it would be over a longer period, like maybe over 5 years rather than just over 5 hours or 5 minutes. But you need scalpers to form the structure on the lower time frames. It's a different market participant, isn't it? It's the scalpers. Maybe you don't get scalpers in wine because it's maybe the commissions involved and everything doesn't makes it impossible to make money in the
Mm,
short term. I don't know. Like housing market, for example, that's one of the issues because to buy a house, there's lots of costs involved, and real estate agents they take a cut. You got to pay tax, and if you sell within a certain period of time, you pay more tax here. So you can't really scalp the housing market. So maybe you get less of a natural structure forming. But I don't know. I do believe though that the market there are market mechanics that are consistent across certainly liquid markets that are like stock markets and futures and forex and anything that's
okay.
traded a lot and quickly.
So what are those market mechanics?
It's like I say, it's basically at any point, at any given time, in and there's like a different buckets of traders. There's some traders that are flat, most traders probably. There's some traders that are in profit. There's some traders that are offside at a loss. And there's some traders that have a 5, 10, 20 year horizon. There's some traders that have a 30-second time horizon, and everything in between. And this all comes together to get to form the structures. So when a market moves aggressively in one direction, normally that's kind of forced moves, I think. So like stops getting hit. If it moves fast, there's going to be a lot of people that are in profit now. So chances are it'll have a pullback. And when it pulls back to where it originally came from, all the people that have got the balls to hold on to it and it's coming back to them, they then get rid of it at break even, which causes it to continue. It's like that's why it doesn't move in a straight line. You wouldn't keep hold of it if you've just had a lot of kind of stress and just been offside and taken a lot of risk on. You'd think I'm just getting rid of this. It doesn't look like it's doing what I'm doing. I don't know.
I agree in a way. Like so many times you see the market price come back to an area where a lot of people probably got in, right? And then it comes back. So obviously there's something happening there. I think that's what market profile talks a lot about, like different time frame participants and like high volume areas and low volume areas. But one thing that I've believed for a long time is it's the structure of the market, like wealth in general. You can't have everybody can't be rich. Everybody can be better off, but if to have really rich people, you have to have the majority in poverty. Otherwise, it's not wealth, right? Because it's comparative. Like now, we are wealthier in the modern day than
Yeah,
even the richest man 100 years ago.
yeah,
But the richest man now is wealthier than most of us today, right? Otherwise, it always has to be catching up. So I think it's true in the market too that everybody can't profit. It's impossible because the profit is a zero sum game or even
yeah,
a negative sum game, but take out the fees and everything. So somebody's winning from somebody, but it's not like one person wins and well, if you have only two participants, one wins, one loses, that's 50-50. But in reality, there are millions of participants. Who knows how many actually? It depends on the market, obviously. But I feel like the majority have to lose because
yeah,
then otherwise the gains are so minimal that there wouldn't be a market. It has to be like 90% losing. Otherwise, and that's why the market moves when it moves big. Otherwise, it would just be kind of fluctuating a
yeah,
little bit, but you get really big moves, and that's because like 90% of people are on the wrong side.
yeah. You have to, yeah, and it's not necessarily the number of people, but the kind of the sizes people. The majority of people are playing small size, and it's a
Yeah.
few big players that are making the money, like the banks and institutions and the people that know what they're doing a bit more.
Hmm.
That and if there wasn't this, but yeah, I don't know. There's lots of different ways. It's not just about speculation as well, is it? Like there's a lot of people use markets to hedge things and like futures markets. If you're in a business, you want to lock in prices to minimize risk in your business. So it's not all about speculation. They go into the market knowing they're going to probably lose, but they at least they know what their future price is going to be for a certain asset if they're running a business. So it's yeah, it's a I don't know. I don't know much about all this. And what I was going to say was I don't actually think it's that important to worry too much about all the whys Like, why does it happen? Why does this happen? Because you get bogged down in this, and at the end of the day, who knows really? I know enough to know I don't know at all. I don't know what big banks' strategies are doing, or institutions, or hedge funds, or teams of people like much smarter than we are. What we don't know what they're doing, what strats they're doing, why they're doing it, and we don't even know therefore why the market really moves how it moves. We were just kind of guessing, but the point is we don't really need to know. So it's flying. Why either? Because I know what I observe and what happens, what I see happening again and again and again. That's all I want to know. I don't care why it knows, why it happens, um, and that's what I try and focus on. Because otherwise, you go down these rabbit holes, and there's a lot of kind of people like to talk about it, and they like to blame things like, oh, that's the Fed news, or that's why this has done that, and that's oh look at that, that's the manipulation and all this shit. I don't care. It might be, it might not be. It doesn't really matter. Just play the market, play what's in front of you. That's why I come at it with a consistent scientific approach. I look at the volume, look at the price, look at the structure, and I make a decision based on that. And everything else, who cares? Who knows why? But that's what it happens.
Well, that makes sense too. I mean, I like the quote, you don't have to know the laws of physics to ride a bicycle.
Yeah,
Like,
exactly.
you don't really have to know. But I do think first of all, it's interesting. And second of all, maybe at some point you can improve your strategy by coming across something. Like I remember a long time ago, my dad said like, oh, I bought this property for I think in the 90s for nothing, for next to nothing, and now it's up like 10x, right? And because I knew that there's a shortage of housing and there's a big population, and but then I read other theories where it's like the only reason house prices rose in the Western world is because of currency debasement over time. It's just it's the way it works with inflation and the value of the currency. So maybe it doesn't even matter if you bought it. Doesn't really matter the location or it's just it would go up over
Yeah,
time.
yeah,
So
sure.
so the point is though, like there are a million different ways of looking at the same thing, and you get a million different answers. But this is why I like it when people that don't understand markets say things like, "Well, yeah, it just goes up or down," right? And in a way, that's true because you can have a million different ideas, but at the end of the day, it's going to go up or down. Like, and there are only so many prices. Like, it's going to go up or down over a certain period of time. That's it. That's all you need to know.
Hmm.
You
Well,
don't really need to know why.
this is your chat line, isn't it? When you
Yeah.
talk to girls in bars and they tell you, what did they say? You think as traders you don't actually do anything, or
Yeah,
what did
yeah.
she?
I said like I had this big trade, I made a lot of money. I wasn't bragging, I was actually like asking her opinion about like
I
what
don't know. It
was
sounds a
coming.
bit
And then
like a brag to me, to be honest.
no, but then I was saying then I lost a lot by giving it by with a big ego and I just handed it up. So obviously I know what I'm doing, but I can't keep it together because I got the trade. But she said, but you're not really doing anything. You just caught a move, which is actually quite humbling because I'm like, yeah, I pinned, but no, all I did was saw it and like I got in and I got kind of lucky in some way. I mean, I didn't know how far it was going to go. I had an idea, but all I did was kind of participate, but I didn't actually do it. I didn't create the market or push the market. I just was like on the wave, you know?
Yeah, I kind of know what you mean. It does a little bit. I kind of yeah. We don't actually do anything. We what we do though. What I think what we have to do. This is what we talked about before. I feel it's a little bit like almost a video game. We have to make fast, correct decisions, good decisions. We have to keep our shit together, our emotions and our discipline and our risk management. We have to be like in a Zen-like state, follow our rules that we've studied. Um, that's what it comes down to, uh, and execute well. And you executed well. Then you suffered wind tilt and did some poor execution. But then that's a whole lesson for you for next time. You know when you have a well, try and remember that. Remember. But that's something. That's not
Yeah,
nothing. But depends how you define doing something. Yeah, you didn't build a house or design a piece of software or do something a bit more wholesome, but you did perform. It's like you can say like a footballer. He didn't. I guess he is physically doing something. He's kicking the ball with correct technique and going into the top corner, whatever. But it is,
well, I see it like surfing. It's used a lot. It's a bit cliche, but especially with trend following, momentum trading, people use the surfing analogy. Like, you're waiting, 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 and then maybe you try and catch a wave and you fall. And then when you finally catch the big one, you're just on it and you're trying to manage yourself, your balance. You're not doing anything. That's God's work or whoever the hell runs the show. But you're just like, well, it's a lot of patience, a lot of disappointment when you don't catch a wave. But then when you get one, you just have to do your best to not fall off it and ride it all the way. And you don't know when it's going to stop as well. It could
mm.
end in a few meters or it could last for a minute.
Yeah, and you mentioned there's a lot of disappointment along the way, and when you have a losing trade, it sucks and it can be frustrating. It can like put you in a bad mood. But something I've learned about that recently is it I mean what I don't think it happens to me as much anymore. I'm kind of starting to shift into the zone, which is I don't give a fuck because I can make it back as long as I execute well. Like I can make it back again. And I think this is a good natural progression I'm making. And basically, it comes down to two things. I mentioned this quote before, like always remember success is temporary, mastery is permanent. So even when you hit a good trade, yeah, it might be luck, you might have executed well, but it doesn't define you. It's just maybe you got lucky, but it's just temporary success. But the knowledge you've built up and the process you've built up and the discipline and your approach and your understanding of everything, that can't get taken away from you ever. So that's solid. And just remember that you've got that. So it doesn't matter if you have a bad day, you've still got that. You haven't lost anything. It's like you've still got your fishing net, even if you've just lost all your fish for the day. Um, Another thing where I kind of love, not I don't love it, but still get pissed off when I lose or have a losing trade. But it's an opportunity to learn something as well. It really is, and more so than a winning trade. When you win, you kind of just like you did, kind of go and win tilt, think you know everything. You shouldn't do that, but when you lose, it gives you a chance to get better for next time. It's presenting you with an opportunity to improve. So it's like it's a great opportunity that is. So you got to look at the positives there and yeah, to improve your process.
But yeah, that's okay. For one loss, that's okay. But imagine that you're in a drawdown, you just had 10 losses in a row. It's very hard not to get depressed and wonder if you know what the hell you're doing and if it's working anymore. All you can do is look back at the past, but it can always go further than you think. So maybe before you've only ever had 8 losses in a row, and then this month you've got 10 in a row. Is that normal? Is your strategy not working anymore? Should you I don't know. It can, and I suffer from that a lot. When I'm winning, I'm happy. I'm loving trading. I'm winning. Uh, I'm like, yeah, I knew this is what I always wanted to do. I'm doing it. I'm happy. And then when I'm losing, I hate trading. I don't want to do it. Like, it's really
Yeah,
fucked up, but I can't handle it. I don't know
wasting your
why.
time. Why don't I do something better with my life? Why don't I do something more tangible? Why don't I build
Yeah.
something? This is a bit of a risk, opportunity cost,
But then I
all that.
start to then I start if I think like that, I think, well, I'm a bad person because all I care about is money then, right? Like I want to be successful. If I'm not, I'm a piece of shit. If I am, I'm on top of the world. Fuck everybody else. But maybe like recently, I've been trying to think. Oh, I took a break from trading for a short time. I missed a big trade, like a 13-hour trade, which was really frustrating. Now, then I got into another trade because it just looked too good and it's up, like 5R or something. But what I'm trying to experiment with, and maybe this sounds crazy, but I'm trying to, well, obviously not care, but almost like you know what? I'm not a trader. I'm just like managing some money in the background. Like I'm gonna focus on other shit in my life, and that's just something. And I'm just gonna like fill in the spreadsheet. It's like really like make it as boring as possible. Like I don't even want to do it, but I'm going to do it anyway because I have to deal with it. and somehow that's making it easier for me. Maybe it's just my mindset, but like if it's really boring, and maybe it should be boring because if it's a job, if you're a professional, you're not really supposed to have fun at work in general, right? You're supposed to just do it and grind.
Yeah, yeah. I don't necessarily get excitement anymore. I more so just get relief that I actually followed everything as I should. I executed properly. That's the feeling. It's more relief than like fuck yeah, I just nailed that bitch. It's just like, oh thank God, I'm out of that now, and I didn't lose my shit. Like, so, but yeah, it does kind of shift. But yeah, I don't know. I can't relate to what you said as much because I think our strategies and our approaches are different. Like you have much lower win rate than I do. I don't know if I could handle eight, nine, 10 losses in a row. It would start to. I mean, it happens in poker. When I used to play poker, you get
Hmm.
terrible variance. You start questioning what the hell is going on here, and you start. That's you shouldn't, but you start questioning your approach, and you start thinking I'm doing something wrong here, and you start googling like what is a natural variance here. Am I just is this natural for me? Is this normal, or am I just doing something really bad? But I've experienced that in poker, but not so much in trading. Not because I'm necessarily a better trader. I'm not saying that. It's just you'd have different win rates. You have different targets as well. Like I'm a shorter term trader with closer targets than you. You go for massive home runs once in a while. I go for little bits more often than not, kind of, if that makes sense. But yeah, so and when I lose, it's usually, I mean, I'm tracking everything 90% of the time because of execution errors. Because of yeah, like, but and then when I make the execution error, I record and I log exactly what I did wrong, and then I put something in place in my process to try and not let that happen again for my next trade. And every time I lose, I do that until I'm getting to the point now where I'm executing with confidence because I know. And one of the ways I do this, I used to. If you don't have a plan in place, you just kind of panic. You go into fast thinking mode, right? Because our brain has two modes: slow thinking, fast thinking. The monkey brain or the kind of rational, I think is it frontal cortex, logical brain. And yeah, I would just panic as soon as you get a bit of a retracement or the trade goes a little bit against you. You just panic out of it. And I used to do that all the time, but I've stopped doing that because every time I've done that, I've looked back and what I did, and I think no, it didn't necessarily invalidate. And you define invalidation points, hard invalidation points. Normally, it's a break in structure, um, and it has to be. And I've got ways of defining it that I've tested over time. And until it breaks that structure, I stay in it. So my default is to stay in it because my default is I've done all my planning. I've been looking at this chart for an hour now, and I'm in it for a reason. So just let it go, let it breathe until it invalidates. And then so it takes a lot of weight off your shoulders. You don't have to make any real time decisions when you're in the trade. It makes it a lot easier for you. Otherwise, yeah, it's kind of impossible to become just make it on the fly. It's very hard to kind of avoid your monkey brain kicking in and your fear coming and just. But but that's how I approach it. So I never had like loads of losses in a row because I unless my mindset is just fucked. And I'm not disciplined, and I'm just literally just on wind tilt, or I'm just not myself, or tired, or something. But that's something else you have to kind of iron out, I guess. But it was making me thinking about I don't know if you've got any thoughts on this, the differences between discretionary trading and systematic trading. Like, I'm not even sure what the difference is. Like, I know what it means, I know, but what's your kind of definition of those two types of systematic trading and discretionary trading?
Yeah, it's a good question. I'm not actually sure. Although I was just reading an interesting article about discretion last night, about discretion in life in general. Like it's a very common theme. Like in religions, in law, there's always really hard rules, but in many cases, you have to use some form of discretion. I mean, even if you're running an algorithm and you're going to draw down, you're going to have to use discretion whether to switch it off or not, right? and you also use discretion when you're building it, because I mean, I feel like all of life is kind of one big improvisation, because most of the time you have no idea what's going on. If you're humble and you accept reality, you have no idea what's going on. So everything's discretion. The
Hmm.
systematic part just makes it like kind of refined a little bit, but you're never fully automated. I don't believe that's possible. I think it's nice to find a balance though. Like, for example, you maybe use discretion for looking at the chart pattern, but then you have very clear rules. You have an automated stop loss mechanism. So you can actually skip a trade if you don't like it. You can skip the entry. Maybe you just don't feel it. And also you're using discretion about yourself, like your discipline. Okay, I didn't sleep enough today. The chart pattern is perfect, but I don't feel good, so I'm out. Or I'm just going to skip it. But you always use,
But is that discretion though, or is that because that's like a rule? Like if I
yeah.
had less than 6 hours sleep, I'm not trading. That's
Well,
system,
yeah,
isn't
that's
it?
true because it's very well defined. But on the other hand, what if it's an emotional thing? What if it's like I had an argument with my girlfriend, but I don't, I mean, how much do I care? Sometimes it's hard to even read your own emotions. So um, I still think it's somewhat discretionary. Sleep, yeah, you can put a number on it, but if it's something else, I mean, what if it's just the pattern that you see the chart pattern and you're not sure? It's there, but you're like, I don't know, it doesn't look right. You can use your discretion or you can take the trade, but as long as you have a very, very automated risk management stop loss process, then it doesn't really matter. You can actually take the trade anyway, and you just know that it's only one trade, it's one small loss, it's not going to kill you, and you can always reassess later. But yeah, it's a very long answer, and I don't have an answer.
No, yeah, I'm kind of with you. Like for me, like on the basic level, systematic is like, okay, I'm entering here, my stop loss is here, and my target is here, and I'm clicking the button, and I'm leaving it, and I'm not touching it until it's concluded in some form or another. Either I get stopped out or I get profit. And you can have built onto that, your stop doesn't necessarily have to just be price based, it could be time based. So if it doesn't hit my target within 30 minutes, I'm just going to close it. You can set that up automatic as well. That's what I understand as a pure systematic. It's all rule based, all easy facts that you can make a decision ahead of time and just walk away from your computer. But discre- but then this is where it gets kind of confusing. Discretionary is like using your discretion, like making decisions in real time after you've entered the position. And look, I think it's still systematic, but it's real time systematic stuff. Like, for example, I may do the systematic entry, but then I will. It seems ridiculous to me to not look at the real time information that's coming in while you're in the trade. This information wasn't available when you entered. As time passes, more information becomes available in terms of what the price is doing, the volatility is changing, the volume is changing. So why not use that? Um,
Well,
and there are advantages and
yeah, if I
disadvantages,
may,
but
one reason why you might not want to is because, first of all, you're in a trade, you're married to a position, you're more emotional, money's on the line, and you can be misled by information. I mean, it's part of the thinking fast and slow thing. Like, there's that very popular example, I don't remember specifically, but it's like, there's a woman, is she like a conservative or a Democrat? And then there's another one, there's a woman and she has purple hair and she loves the planet Earth and like all this extra information. Does she love, is she a Democrat or it's not the example, something like that. And everybody votes, oh, more information. It sounds like a stereotypical Democrat, so they say Democrat. But I don't remember the trick actually. The point was that yeah, statistically, like there are less people because the more information means there's less people like that. So she's more likely to be a conservative or something like that. And that information can trick you, especially when you've got money on the line. And in many ways, like you even said that to me a few weeks ago, like keep it simple, like I don't remember exactly what you said, but you need to define it and then keep it simple because otherwise you're just
Yeah, measure everything, define.
yeah.
Yeah,
But if you're using discretion in the middle of a trade, I think that's kind of crazy.
yeah, but yeah, no, and that's exactly what I was going to say. That's the disadvantage with discretion. It's hard. It's a challenge because you're in the fog of war, or no, you're in the heat of war. I don't know, fog of war. You're in a battle, and yeah, you're not flat and you're not unclouded. You're going to be biased. You're going to be married to the trade. So it's hard to do that. You got to be zen. You got to detach yourself. But what I was going to say was, as long as it's kind of you're making systematic decisions though. Like I've got a rule, for example, if the relative volume exceeds what it did on the first touch of the level for this particular setup I'm playing, then that's an invalidation because it's not exhausting. Basically, price is not exhausting. There's still buyers in this market. If it was going to exhaust, they shouldn't get the same or significantly more volume in this market, in this consolidation zone. So I closed the trade. That's through backtesting. So is that discretionary systematic? But it's a real time systematic
Yeah,
decision,
it's more
maybe.
systematic, I'd say.
Okay. So maybe I am completely systematic then. But I take into account. I think you have to have systematic. Yeah, it'd be super hard to be discretionary, pure discretionary then to think, oh no, I don't like the feel of
Well,
this. I don't like how
no,
this
well, this is
looks.
what I'm saying. I
Just
use discretion, but with a set of rules. So I enter a trade, I either get stopped or it runs, and then I'm in profit. And at that point, there are basically I can move my stock to break even, and I have a rule for that. But recently, I've been like, if it doesn't look right, doesn't feel right, or I think the risks are there, then I will prematurely move my stock to break even. That's a discretion, but it's still only leave the stock or move to break even earlier than I should. But I'm not like then like closing the position or changing the size or flipping it's discretion, but with very like basically A or B, and then like I trail the stop, and there are rules for that too. But I guess in theory, I would be happy to use my discretion. Like if I think it's going to be volatile and I may get prematurely stopped, I'll leave my stop at break even for a bit longer, even though the rules are there to trail closer. So it's basically A, B, or C in that case. Um, so it's discretionary rules based. I pick a rule. I use my discretion to pick one of the rules.
yeah, no, this is interesting. Like I think I am a bit discretionary then because, and this is probably something I shouldn't do when I'm in a position and I want to add, because it's not invalidated yet, so I want to add. I normally have knee-jerk reactions where the price suddenly moves in my favor, then I add. But I should just add before the
Mhm.
move, if that makes sense. Like I'm reacting. I'm not being proactive. I'm being reactive to the price moving, and that's just a terrible thing to do. Like, oh, the price has just moved. It's going to keep
Yeah.
moving. Oh, I'm going to miss it. That's I probably have to iron that out. That's a discretionary element I use when I'm adding. There's no system behind that. It's like, oh shit, add, missed it. So
hmm
I should have better rules to define when I sometimes do it right, but sometimes I would wait for a pullback before I add, and it's harder to do it then because obviously then you've got a little bit of momentum against you, and you've got to hit it head on. But yeah, that's probably a bad thing. I've got to kind of. I think it's never good to do that, is it? To chase a market unless you're absolutely sure.
No. If I think if you're, and that, it could depend on your style. Like if you're a news trader, you need to react. But I think in general, for me, my experience, if I well, and for a long time, I was using market orders in many ways, in many cases. But I think it's very easy to, if you're reacting, you're probably making a bad trade. If you don't,
Yeah,
if it's not doing what you expected, then you can react by getting the fuck out. But if you're reacting like adding or entering, I think that's very bad. It should always be, in my opinion, like
mm.
preset levels, preset or now I only ever use orders. And here's an example
Limit orders.
of some kind of this. No, no, I use buy stops. But here's an example of where I use some discretion. I saw a setup. but I wasn't totally sure because, right, let me try and explain this. But I have set rules, like in terms of my entry signal. Like there's so many bars on a certain time frame, and then like I buy on a break high or a break low. But sometimes it's not that clean because even if I mean, I've used some indicators to see if there's some algos to really define higher low, lower high, and so on. And different indicators show different higher highs and higher lows.
Sure.
I don't understand why. It sounds simple, but
Yeah.
like, for example, like it's a bar and it goes up, down, up, and then but the higher low was also like closing lower. So it's not really a higher
Yeah.
low. It kind of
Swing
it's
failure pattern. Yeah,
but
maybe.
yeah, and if you go down on a lower time frame, it's still overall across that time frame like a higher low, but on the chart that I'm looking at,
Yeah, yeah,
it's not
yeah,
clean.
yeah,
It doesn't look
yeah.
clean. So the other day I had that signal. I wasn't sure. I let it go, but then when it actually like where I would have been triggered and it moved, it looked really good. So what I did was I entered a limit order where I would have entered with a sell stop. So I like it already moved down, it made a lower low, and I missed the move. But I thought, okay, because I know that if I was in the trade, I would still I'd still be in the trade, and my stop would be higher. Like I wouldn't be moving to break even. I would be in the trade now. So if it comes back, I can get in the same trade. Nothing's changed. I'm just entering later than I would have. So I did. That's what I did. That was an element of discretion. And in a way, well, in the end, it went further. I moved my stop to break even as I would, and then it came back and knocked me out at break even. Um, and it was even a good trade because I saved money on commissions. But I don't know how smart that is because if it then came back and I got sucked out, I may have some kind of tilt. I may be like, fuck, I knew that wasn't the right pattern. That was bullshit. Why did I lose that on that trade? But still, there were other factors that
I would say you
influenced
need
it.
a better way to. It sounds like you need a better way to define a breakout. And
Yeah,
I know it's hard. I know what you mean. But you need. This is the way I like. I've said before. Like I think it's all about the. If you're using candles, I don't know. You could use volume profile or whatever. But if you're looking at structure and candles, you need to define what time frame the move is significant on. Like a minute, of course, on a minute you would have got closes lower on a minute chart, but on an hourly chart maybe it was just a wick. So you need to have some way of defining what is the important one for you for the particular consolidation zone, and it'll vary maybe. That's what I do. I have a way to define it, and I know like in some cases it might be a 15-minute close above here is an invalidation, but in other cases it might be a 60-minute close above here, and it's basically to do with the size of the move. Uh, I like the Bitcoin move at before Christmas time. That was like going on for months. I don't know, well, weeks. Like since was it November to December? It's just like
yeah.
consolidating flat. That wasn't obviously an hourly move or a 4 hour move. That was like a weekly or even. But there's ways to define it. So then, therefore, I would say the week or whatever it is you use, if it's a weekly, it needs to close above.
Well, no, but this is my belief though that now I'm more in the camp that the setup doesn't really matter that much. You still got some rules, but it doesn't have to be that clean. It's more about the environment. Like say, I know it's been a month of consolidation, volatility is low. I can't explain why, but it's kind of a law of the market that it's cyclical. It's set to explode. I mean, I know traditional technical analysis believes that too. Like if you have like a wedge pattern, then it's going to break. Like when you have consolidation, I don't know how it works in terms of market structure. I have some theories, but something's happening. It's like building up, the pressure's building up. So if I see if it's making a higher high, it may not be that clean. Like maybe I'm looking for 4 bars, but for example, I'm looking at 4 daily bars, right? So but sometimes it's like 3 bars and the third bar is already a higher high when I'm waiting for a fourth bar. But if the environment is so great and it's so juicy, I'm gonna take the trade anyway because for me it's not that important. I believe
Right?
it's
Yeah,
not
yeah.
as
It's the
important as the
environment.
environment.
Yeah, that makes sense. It's fair enough. And of course, like we said earlier, even the setup isn't that important. All the environment is this managing of risk, isn't it?
Exactly, yeah. And I also know that like I have a very precise way of like measuring my stop, which is based on volatility. And so even if I make a even if it's a bad trade and whatever, I'm out. Like I know that it's one trade. So it's almost worth it, especially for my style because I'm going for these big wins. I'd rather take a trade that may not be quite right and have a small loss, then end up missing the one trade that fucking runs and makes that quarter.
No, I'm making notes here. I'm finding this useful for me. I was still going back to that question you asked me about how I would lose. I love that because
Yeah,
it makes you think about it. It proves the point that who gives a fuck about the setup?
yeah,
Doesn't
yeah,
matter. My first response wasn't like, "Oh, I would trade
yeah,
triangle. I'll trade ascending wedges
yeah,
and long them instead of short them. I won't go against the chart pattern. Of course not. It's all about that. That for me is just it's like an epiphany moment. It's kind of backing up what I kind of already know, but yeah, it's how to lose it. It's good
yeah. I
question.
don't know. I still I don't know if I'm explaining this right, but I still like this idea that I mean, how many times? Okay, if you go to any like any positioning website where it shows you the long to short ratio of market orders or whatever, um, that like so many people are long, so many people are short, and if you go to TradingView and look at all the different charts, somebody's looking at a wedge, somebody's looking at Elliott wave, somebody's looking at moving, and but like half of the fucking market is long, half is short, and they all have a million different reasons.
Yeah,
So at some point, I mean, are they all right or are they all wrong? Because it's probably all bullshit. Like there's a different reason why it's moving. And like to your point, it doesn't really matter what it is. It just matters that you can measure it, capture it, and like refine it
recreate it. Yeah,
yeah. So in a way, I mean, maybe all these setups and stuff, it's just our way, you have to have some model of looking at the
yeah,
world, but
something to
it's
lean
not
on.
reality at all. It's not,
Yeah,
it's probably wrong, probably all wrong. Like even your profitable strategy, if you have one,
yeah,
may not even be the reality. It
yeah,
may be something completely different that you've captured, but it just seems to be working in the way you look at it.
yeah. It's 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 the crux of it of trading, and ironically, most traders, especially new traders, are desperately seeking for a holy grail or a strategy or a setup. Show me something that works, or that's what they want. Give me some source, but it's completely nothing to do with that. It's they're just looking in the wrong direction, and as soon as you realize
Mm,
that, the sooner they realize that, the better.
mm,
It's just a waste of time. Even like reading trading books, I don't know. I mean, it helps you develop on a more macro level. Like if you like, I listen to the Chat with Traders podcast, and you just hear about experience. If people are sharing their experience with you and talking about stuff like we're talking about, like then that can be potentially helpful. But if you want to trade a book on strategies and like this is how you trade a double top, then that's unnecessary, I think.
yeah. Well, yeah, I've never really read those kind of books, to be honest. I've tried, but I could never finish them. Like that's why I like the Market Wizards ones because it's not about strategies, it's about people and their different ways of trading.
Yeah, yeah.
Yeah.
And I remember when I was first, I've been trading for 4 years. I remember when I first started trading, I was falling into that trap, and I found books like Market Wizards or Mark Douglas. I found them like boring. Like, oh, show me how to trade. Show me where do I buy, where do I sell. And I was thinking, this is boring. It's not showing me anything. It's just talking about like woolly nonsense, fuzz. I don't need to know about that shit. I want to know where to buy and sell. But now I'm really fascinated by that side of it. I don't care about the buy and where to buy and sell. It's not. It's just flipped completely. And I think most people, well, clearly don't get to this stage because they go broke or they realize it's a lot harder than it's not get rich quick. So they never get. I think I read 80% of traders quit within 2 years. So they, yeah, they don't last long enough to realize it.
Yeah. Well, speaking of like strategies and stuff, where to buy and sell, I don't read those kind of books, but I do like to read books about trading strategies in general. Like, you know, options, for example, read about options, how they're priced, and that has given me new ways of looking at the way I trade, which is more, directional futures trade. But then it brings in the element, oh, okay, the contracts are based on time as well, so that's an element, and volatility and all those things, and it can give you a kind of new perspective of the way you look at things.
Yeah. Did you want to wrap up, or is there anything else you want to talk about? I don't know. Could talk about my mindset, my recent mindset shift. Um,
Yeah, maybe tell me just even off the record what actually happened with you.
well, I could tell you on the record. It's not,
Okay.
it's nothing too serious. Um, I think what it comes down to is the way my brain works. Like everybody, but me, even I'm particularly susceptible to this, is like kind of putting things into like grouping things neatly. Like it's the kind of same idea of the New Year's resolutions. Like that year's finished. I'm going to start a new year now. I'm going to do some new stuff. What happened with me? Q1 finished, right? For me, that's a thing. January, February, and March, where I absolutely nailed it on the trading front. 70% win rate, 26 trades, not a huge amount, but and nice P&L curve, and sticking to my plan, and also improving and learning, but it's trading pretty small. Um, and I almost felt like, okay, I've done it now. I've done it. I can do this. And it's the epiphany I had as well was about being consistent. Me being consistent. Like I was also going to the gym, drinking a lot less. No hangover. I did have my original plan was no drinking, which I managed a quarter of. But now my plan is no hangovers. So that's why I kind of max out like 2 or 3 glasses of wine, 2 or 3 beers, and I stop. But anyway, we digress. So I had a nice Q1, and then a few things happened kind of simultaneously. Like there was a little bit happening at work, so that was kind of on my mind. Maybe my hours are going to be a bit more reduced, which is fine. I don't necessarily need the work, but it's something. Also, I had a tax bill, and the way it works in Malta, it was higher than normal than I expected. Because the way it works in Malta, they normally, like I'm paying now for like the tax from last year. But also, after you've been 2 years on the books, then they start charging you, like predicting it for what you're going to be done, what you have to pay this year, and they base that on what you earned 2 years ago. It's really complicated, but basically, I'm hit with a double tax bill all at once because I've got to start paying tax for now based on 2 years ago, but they're estimating it, and I'm also haven't paid in tax yet, so I've got catch up. So I've got a shitload of tax to pay that I didn't anticipate. So the quarter finishing, the kind of completion of that, the kind of reduced hours at work, and the bigger than expected tax bill. I think I've kind of analysed this. All came together and thought, fuck, okay, let's easy solution to this. Just add a couple of zeros on the my bet size. Bob's your uncle. I can start. I'm not kind of desperate for money. I'm still kind of comfortable and I'm not kind of panicking or anything. But it's just adding a little bit of pressure, like, okay, maybe I should start earning some fucking money from trading, like some serious money now. I've proved myself in Q1, so that's what I did. I sized up, but and what I do,
So
simple
how
snippet.
much bigger did you size up? Like how many times bigger?
Um, I would say at least between 3x and 5x. Uh, yeah.
But yeah, it's quite a lot though, right? I mean, it's quite a big jump.
I've been yeah, possibly potentially it's that's an part of the factor as well. Um, but yeah, that's what I decided to do because I was comfortable, I was confident. But I think and it yeah. So I sized up and but what I noticed and I record in my trade log I have like a pre-trade mindset field to enter. And I felt this sense of aggression or kind of forced, rushed feel. Like, okay, I'm doing this now. I'm doing it. Like, I'm doing it. proactive. For the Q1, I was all the time just chilling, just waiting, just I don't. If it comes to me, it comes to me. Nah, I'm not going to trade that. Nah, I don't quite look right. Nah, I was being super selective, super patient. But now I was like, okay, I'm doing this, and I was going in, and not only did I size up, but I'm also increasing my volume of trades, which is probably not something I should be doing. It should be doing exactly what I was doing before, but just with another extra size. So it's kind of I've done two things simultaneously, and I've done it when all this pressure's come on. Not pressure, but circumstances have changed a bit, and I have changed. I can feel I have changed. Like I said, I went to the gym the first time in almost 3.5 months, and I just forgot stuff. And I've noticed it, and I'm drinking slowly creeping up. I haven't had a hangover yet, but I'm starting to drink again. And I skipped a couple of gym days, like just three, but it's the longest day I've ever skipped. And I'm noticing a shift in my consistency basically, just as I'm sizing up. And there's also the added extra execution pressure when you're sizing up. And I didn't necessarily do anything wrong, to be honest, but I just had a couple of losses. And of course, it destroyed my entire P&L chart because I was bigger size. Uh, and then that has another knock-on effect of now, okay, I
Well,
make it back.
it's just I've just realized something. Like, why are you still looking at the other chart? Because it's why don't you just start a new P&L chart from this next quarter, and that's it, fresh. Now you're in a drawdown. You look at it like that, not like you've lost all that from
Yeah,
the
yeah,
previous
well,
quarter. That just
yeah,
sounds like
that's exactly what brings me some comfort, actually. I like, okay, I'm going to draw a line. I did Q1, I completed Q1. Now I'm into
yeah, yeah.
Q2. So I've done exactly that. That helps me actually. So it's a new chart, if you like. It's a new system, new, and it's strange because I started off with a couple of trades. I had my biggest ever loss, and then I had my biggest ever win. Obviously, not natural because I've been sizing up. So it was good to have the win, and but yeah, it's and then I go through some.
It's
Go
Can
on.
I just say before
Yeah,
I maybe forget, I've noticed the correlation with myself too. Not just the size, but the relative size also seems to correlate with the volume of trading. So when I had that big trade at the beginning of the year, it was a sized up. Then for some reason, well, obviously there's the wind tilt effect as well, but then I started to make multiple big trades, a lot of them.
mm,
First of all, they like some of them were totally not even in my rules, but then others were. But I was this was part of the reason why I felt good at the beginning of the year because it was a new thing that I was trying, like sizing bets differently. Like some trades are like normal size, and some trades I go like all in. And then, but for some reason, then I was all in on every trade, which is very dangerous and very wrong because I
mm,
know that probably I only get like maximum one a quarter, so four a year. I can't be every trade sizing up. So there is an element there that it's like psychologically, when you've got a bigger position, you also, your body is in fight
mm,
mode and you're like making more trades, faster trades,
yeah,
so maybe you just need to keep even experimenting, find your like now I've sized down, my position size is lower, and I'm finding it really easy to follow my. It's boring. It's actually and especially compared to how big my trades were. I don't even care now. Like, oh,
mm,
it's up, it's down. It's not even a lot of money. Like there's less zeros, and it's just somehow
yeah,
easier. Maybe you need to find your
yeah,
and it's very particular to your lifestyle, your equity, whatever, you need to find the number that's just big enough that it's significant, but small enough that it's not going to fuck you up.
yeah. It's go back to I think it was a quote from Tom Dante, and I can't remember who said it, whether it was an old prop firm manager or someone, but he basically said he asked someone, what's the number one thing that you think helps what's something that your best traders have in common or something like that. And it was something along the lines of they don't need the money necessarily. They're not forced. They're not trying to fight for every single penny. And in that mindset, you just let it come to you and you just wait. You're in no rush. But when I've had this mindset shift of, okay, fuck, I'm going to make some money, you just think, but you don't,
Yeah,
you can't
don't think
force
like
it.
that. Think of it like a game. This is why I think you're gonna like the podcast. The guy that says I don't need the money anymore. Um, he also said he thinks like a lot of players, a lot of traders put too much pressure on themselves. Um, and he doesn't even look at his P&L. For him, and I've heard that a lot with good traders, it's just a game. It's just like I want more. Of course, you look at your P&L, but you're not looking at it like, oh my God, that's the price of a house or whatever your measurement is. You think of it just as numbers. I want more numbers. I want to win at the game, right?
Yeah, yeah,
Um, yeah,
yeah,
I think there is
yeah.
something there.
I think that yeah, that happened to me as well a little bit. I've lost a lot of respect for the value of like in Q1 I was very cautious and maybe overly cautious about cutting, but now I'm more I don't give a fuck kind of attitude, and I don't care because I can do this. That's kind of what I've been thinking. Like, and if even if this doesn't play out, I know I'm just going to follow my plan, and it will play out eventually. Like next one will. That's kind of where I'm going, but I'm doing it so aggressively. And I don't know if this is. I think it's certainly good to kind of snap me out of this super small sizing, but yeah,
you remember I told you there was something in the Alpha Trader book about people struggling to size up, and there was some technique, and I couldn't find it that time, but you read the book. So do you remember there was something about a trader that struggled to size up, and he had some kind of where you incrementally size it up, and then you find the size that's right for you. Do you remember anything like that?
I'm trying to remember. I might have it written down somewhere. Um, I do remember a chat with traders podcast I listened to about sizing up, and it's about finding the sweet spot. You don't want to size up too big because maybe that's what I've done because
Yeah.
it can fuck you over. But just size up. There's like a
Well,
yeah, basically a sweet spot of
yeah, there's a nice anecdote. This won't apply to you because I don't think you hold positions overnight, but it's like you've got to size up until the point where you can't sleep at night, and then once you get to that point, size back down to where you can sleep at night, you know.
right.
And that's the optimal size. And even the alpha trader guy says that you've got to size up to the point where you feel a little bit uncomfortable, but you're not stressed.
Yeah.
Like it does make your knees shake a bit, but you're not out of control, you know. Um, and I don't think it's not as simple in the real world. It's not as simple as the count equity percent. It's because in real life you come from, you know what the average salary is, you know how much capital you have, you know how much the value of a house is. So if you get to that level at some point, that's why we know that banks and hedge funds, they trade different. When you're managing $1 billion, you're not trading the same way that somebody trades a $10,000 account. It's it's a very important factor because we live in the real world. It's not a game, but you've got to try and approach it as
Yeah.
healthily as possible as a
Now,
game.
now, what I'm thinking is, I one of the reasons I got into trading was the scalability of it. I think that's attractive for everybody who trades, and the assumption that if I can crack this at trading this size, I can theoretically just trade 10x this size, play the same game, and theoretically make 10x the money. In poker, you can't do that because you have to play against better opponents. But in trading, you can do that, and if you're not limited by the liquidity of your sizing and everything. But that's the theory. And now I've done that again, and I mean, I haven't had a huge failure. It's not even a huge loss, absolute value. It's well, I can super afford it, and I've only been doing it for a week, and I've just realized my mindset has shifted. So I'm kind of chilling out a bit now and trying to understand it. But what I'm concerned about now is that assumption, basically. Like, can I ever do that? I feel like I've cracked it at a comfortable sizing, but it's not as simple as adding a couple of zeros to your trade size, is it? Of course it's not. but now is it? Maybe it is, but I've just done it at the wrong moment. I've just done it when I've got all these other things going on, and I've changed. I've put my foot down proactively. I haven't just kind of thought, I don't know, just kind of casually sized up. I don't know how you do casually size up, but like you say, I've also done more volume, which I shouldn't be doing. So something's definitely changed, and it's not just about the size. And it's not like I panicked out of the trade as well. I executed pretty good. Um, yeah, I I executed and I cut where I normally would cut, but just because of the size of it, it was bigger than anything I've lost all year, and then that had an effect on me. Like, oh, I've just had a massive loser, relatively speaking. Then it has like a knock-on effect, and then the next one I fucked up the execution terribly, like the one I think it was yesterday morning. Yeah, that was kind of sent you screenshots of. That was a perfect setup. If I was playing that smaller size, I would have nailed it. And I actually had the plan of it retracing back to the 12-month. We're talking about Bitcoin here, 12-month bottom of the 12-month candle, and then continuing down. But yeah, that was just terrible execution. I just panicked out of that. I thought, fuck, this isn't working, and I had no reason. It didn't invalidate, but I just closed it for whatever reason. My whole mindset was stressed. Like I got up that morning, I was going to go to the gym, but I didn't go to the gym. Layla was waiting for me because she wanted to go to the gym as well. I was like, no, no, there's an opportunity. I'm just going to trade this, and it was an hour on the hourly time frame, so it was taking 3 or 4 hours to accumulate, and I was waiting around for it, and you feel like you're doing nothing when you're waiting for it. So yeah, it I just fucked up the execution. But yeah, but at least I'm I'm aware of this. It's not. I'm well in touch with my state of mind, and I've identified. I've only had two losing trades, but they've just been big ones. It's not like I've this has gone on for months and months, and I've blown my account. I've only lost a tiny amount of my account size. So, but yeah, it's. I'm just wondering. I've lost a bit of confidence basically in just in the assumption where I can just add a couple of zeros, and I'm not. I don't know how to. I think I just need a bit more time, but we'll see. I don't know. Have you ever had a plan for sizing up? Or you just done it? Or you shouldn't let external events dictate when to size up, I think. That's the problem I made.
Yeah, that's very true. Um, I don't know. I know I don't think I have had a plan, and that's a problem. Especially like at the beginning of this year when I had that big trade. That's the most money I've ever made. I mean, I was obviously not told you how much it is. It's not that. It's not like I became a millionaire or something, but it was a lot of money, and that's the most money I've ever made. And I was like, and yeah, that's why I liked. I can't remember who it was when we did that special event. He said like you've got to have a plan. You've got to. I think I have a gambler's mentality for sure. I don't feel too bad because I know Jesse Livermore felt the same way. He used to say he just saw trading capital as extra margin, and that's bigger trades. That's so maybe it's a superpower, like you said once. Like it's good that
Mm.
I have a healthy appetite for risk. I can make big trades, but I had no plan. And I think most people would probably be like, okay, that's a lot of money. I'm going to take half and like put it in my savings account or whatever. I'm like, fuck, it's more margin I'm going to make. And imagine the next trade, it's going to be like
Yeah,
fucking a lot more money. Um, so that's not very healthy, I don't think. But so next time, now I do have a plan. My plan is very simple. If I make a big trade, like a big profitable trade, um, that really pushes my account equity up, I'm gonna take 50% of that win and just put it away and not touch it. And also I realize as well that my trading style is because I've always had limited capital, and this is why I think I've been working with limitations. My limitation is I'm a retail trader, I have limited capital, so I have to get I have to find a volatile instrument. I have to catch a big move. I have to, all these things. That's one of the reasons I think I came to Bitcoin and crypto in the first place. I ended up gravitating here, and that's why I have a strategy where I'm trading volatility. I'm going long volatility, tight stops, big moves, trending. It makes sense that I'm kind of proud of myself that using my limitations, I found a strategy that fits my limitations. But the problem is, even when my account size was big, I'm still trading that style, which is kind of dangerous because it's very aggressive. Because I have a lot of drawdowns, and if I trade too large, then I lose big chunks. So what I've realized is next time I actually always want to keep just a tiny amount of money on my trading account just to cover margin. So there's 2 points here. It's good, it's safer because the exchange could go down, it could get hacked. I have less capital at risk, but also my mindset, like when I have limited, like I have like between 5 to 10 trades, like there, it also helps me not make impulsive, premature trades because I know, okay, I can't afford to lose this
Mm.
money because it's my trading capital. Now, theoretically, I am going to be like reload it because it's not my full, it's like my risk capital for that quarter, for example. But if I lose it all, I have 10 losing trades, then I'm going to reload it with the rest, with another 10 trades. But still, it's actually helping to know I've not got that much capital to lose, so I've got
No.
to be very precise with the way I trade and my entries and my risk. I can't let a trade, can't move my stop. But when I
Mm.
see the move, I go all in. I use all my risk capital and I'm in and I'm adding and I'm fully 100% margin exposure. Um, and I think it's really helping me actually to think like that.
Yeah.
It's like
Yeah, it's
I don't know if it's learned behavior or what, but it
it's like
seems
a
to help.
psychological thing, just having a smaller
Yeah,
account.
yeah, yeah.
Yeah. Yeah. Might maybe I'll try something similar. I don't know. But I think you also reduce a bit of exposure, like exchange risk. Ex Yeah, like
Hmm.
if the exchange goes broke, you don't leave all your money on the exchange, especially in
Yeah.
crypto. Not so
Hmm.
much of an issue in more traditional markets, but
It is though. It still is. It's not as common, but it's still an issue. It's a real risk. Like I mean, it happened to Nav. He lost. MF Global went down. He lost. I don't remember millions. I think. Like it happens a lot.
yeah, true.
So it's also a trade in itself. And that's the whole point of leverage. It's actually not risk, it's actually a way to reduce risk because you can take positions with less capital. You can put your
Yeah,
capital to work in other places.
yeah. So you should use
Uh,
that. Like,
yeah.
yeah, you should use leverage with a smaller account. Yeah,
Exactly, yeah. That's the whole point of what stops are. Stops are a very smart way to manage leverage, right? And leverage is a smart way of managing capital.
I never thought about it like that. I've always thought I never really thought much about because I've never been. I'm not. I've never explored this avenue that much because I haven't been focused on sizing up and making money for 4 years. I've never blown an account, but I've never made much or lost much. I'm just, making tiny amounts because I want consistency first. But yeah, it's true. Should just use leverage if it's there. It's like borrowing money, isn't it, for interest-free loan for when you're in the position.
Yeah.
So use it. But yeah, yeah, something you said actually, you kept saying that you move your stop to break even,
Hmm.
like when you're in a trade. Is that like so you don't consider the market or the structure or what's happened in the market. You just look at your entry point to make that decision,
No, no, it's
which doesn't
based
mean
on the
anything. Like,
no, no, yeah, but the point is it's based on the volatility and time. So if it's moved enough in a short amount of time, then I move to break even. And that is arbitrary. Why break even? Well, because the way I'm looking at it, it's like explosive move. It's like the market is repositioning, repricing, people are getting liquidated, and there should be like
Yeah.
it's like jump into the next level, and then it consolidates and it builds, and then when it consolidates again, then I move based on market structure. But that first move, and I'm looking back at trades, a lot of the time they work very fast. So at one point I might actually add it, like if I'm not in profit in the first hour, then I close the trade. I haven't added that yet, but it seems to be the case. The really profitable trades is just I'm like, because I'm using stops as well, buy and sell stops. So I get slipped a lot. I also calculate that I use a rule of thumb like 10% less just to cover for slippage of the risk size. And often I get slipped, but I don't care because I'm going with the momentum. And sometimes I have like zero drawdown, like nothing. Yeah, I have the spread obviously,
Yeah,
but
yeah.
like a no drawdown, it's an instant profit and it just runs. Sometimes it comes back, sometimes not. But yeah, so it is arbitrary, but it is based
It's
on
interesting. Yeah, I'm normally, yeah, I'm getting it involved in the consolidation areas, like over time sometimes adding in the zone, right? Not in the breakout. So I want to be in it when it's breaking out.
you mean you want to already be in it when it's breaking out.
Yeah, exactly. Yeah, I want to already be in
Well,
it.
yeah, well, me too to an extent because my entry signal is literally just before, like for a buy, it's just below the higher high, and for a sell, it's just above the lower low. So but it's very as close as possible. Like n not quite after, because then there's more slippage, but not too far behind the level because sometimes it like comes up and people are fading it. I don't know what's going on, but it's like as close to the edge as possible, so that when I catch it, it should move.
I think there's lots of different ways to terminology to define it. I've heard it called front side entry and backside entry.
Yeah, I like backside entry.
Yeah, backside penetration. I obviously on the if you're entering on the front side, so funny. I'm not going to get that out of my head now. Entering on the front
Well,
side is you get a better entry. I can't say this with a straight face now.
I'm sorry, I don't actually know what it means.
The left side of the V or the right side of the V. That probably
The
is
V, fucking hell,
less of
might
an
be getting worse.
innuendo.
Yeah.
But I can't explain this without thinking about penetrating a lady now.
All right, let's just get this over with, and then you've got a girlfriend to attend to.
But yeah, entry on the front side. So this is when before there's less confirmation. It's more potentially more of a risk. Less information is available to you because you're entry getting an earlier entry. So let's say it's just imagine a V. Yeah, we can do a V bottom. So entering on the front side would be on the move down.
Yeah, I'm
So
sorry.
before you like might be knife catching. It's just coming down fast and you're entering because you have a level in mind. Maybe you've seen a little bit of volume change or whatever, but this is an area you want to do business, so you get in early, but it's more risky potentially because it can just keep falling, but you can potentially also get a better entry if you hit it just right. But then entering on the backside is you start to see some accumulation form, you start to see maybe some exhaustion, some selling exhaustion, and you start to see more confirmation basically that your expectations are playing out. This goes back to systematic and discretionary. So, but I'm not even sure if but you're starting to see more signs as time passes. It's going sideways on this level, so you can enter again or add, and
Well,
then
my way of doing
yours
this
is
is to
actually on
use,
the breakout.
yeah, but I'm using fractals. So like when all the time frames align, then I'm all in, and I'm getting well, I also experimented with that. At some point, it just gets too hard to manage. I mean, in theory, you could go all the way down to like the microsecond level and try to catch a trend from the very, very beginning. but it's just impossible to manage. Maybe if you had an algorithm or something. But yeah, in a way, that's also because it's like the lower time frame
Mm.
like starts a trend, and the higher, and when they all align, that's your 100% entry signal. So you have got confirmation from the lower time frame.
Yeah, yeah. No,
But
I
I'm,
know.
and
Yeah,
I'm
yeah.
entering at the extreme of the higher time frame because that's my final confirmation that I'm right on the direction.
Yeah, so you're kind of aligning time frames. Like the higher time frame is once something's happening, like it hasn't even started showing up maybe on the higher time frame yet, but the smaller time frames it has started turning, but it hasn't propagated itself yet onto the higher time frames. But the
Yeah,
momentum is starting to turn, so you're seeing the early signs.
yeah, like
Um,
you may see it building up on a higher time frame, but until you get the momentum moving, like the price is not going to move until the lower time frame moves because I mean it's
mm,
the same thing. It's printing like the hourly bars are printing the daily bars and daily bars. So you know that you're never going to get a weekly high until you get a daily high and an hourly high. Ha la 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 la. You know what I mean? So
yeah, yeah.
for me, that's my way of confirming. Even though I'm entering an extreme, I'm still confirming on multiple time frames, and it's fractal in nature, and it's almost like it's a confluence as well. So it gives me some added confidence.
Mm. Yeah, I mean, I guess I'm not playing as bigger moves or bigger swings. But I do a little bit of this, but my equivalent is like maybe I'd see something on the minute, a structure break on the 1 minute, and then a structure break on the 15. And my whole setup is maybe on the hourly. But I mean, and you're doing it on like weeks and days, more of a kind of swing position, whereas I'm more of
Hmm.
a shorter term. But yeah, it's still ultimately you can enter. I always when entering on the front side, I'm always early. There's another kind of innuendo for you. But yeah, I'm always getting in far too early. It's I don't know. Like I get in. It's not a bad entry, but then I have to wait sometimes for maybe an hour. On yesterday, that's yesterday morning. It was like 4 hours, and it was just going accumulating for 4 hours. I think that's what it was. I mean, consolidating, accumulating. I call it accumulating because I think it's going to reverse, and it's already decided. But I can see the sellers exhausting as time passes, and then it starts to break some of the structure on the upside. But I was in it super early, but I could have waited to enter more of a backside position, and once I'd had more confirmation, there's no need to enter so early. But sometimes it does just go uh, without any accumulation, depending on
Yeah,
what the higher time frame. So that's why I always get in early because of FOMO, I guess. But I have my rules. Like I always enter on the first touch of the level on the front side, and then if it does what I expect it to do, I add. That's my risk management in a way. If it doesn't, it crashes through and hits my hard stop. It's a smaller position than it would have been if I'm adding. So adding is a risk management tool. That's a powerful thing to learn as well, because your losers are going to be small. But when you add after on the front side with discretion or more information becomes available, on the back side, you win more when you win, then lose less when you lose. That makes sense.
yeah, yeah. But based on your setups, are you ever actually you always have a profit target, right? Or is there ever a case where you could
Mm.
keep getting setups and just keep entering and adding and adding and adding, or would there always be an exit?
Because my average trade time is like less than an hour. Always have a target, yeah. And I've experimented with this. Sometimes it's hard because I don't have so much data on this, but sometimes it will go straight through my target and I could have left some on. Sometimes it hard rejects my target, just tags it and then continues prevailing trend. But what I've learned to do, what is the best thing I think to do, is take it all off on my target. And if it's going to continue, it normally comes back and retests my target. So I recycle and I re add. if that's happened, if that makes sense. So it goes through. So I say I'm long, I'm buying a level, my target's here, and I've experimented. I thought I don't want to take it all off in case it runs. You got FOMO. Why should I take it all off? I'm cutting myself short. And I've experimented in the past to only cut, but a lot of the time it just hits the target and comes back in again to the range, and I'm back to zero because my range is so small because I'm scalping almost, and I don't want to lose all that profit. So, or even then I start just taking half off, but then I lose half at break even. So now I just take it all off because if it continues through that level, it will then come back and back test it and then take off.
Hmm.
So then I recycle and re-add on that level.
Okay,
And if it
that's good.
comes
Yeah.
back and down, I don't lose it. That's I learned from some webinars about recycling. It's
Hmm.
yeah. Why leave? Because you don't know what's going to happen at the level. If I start to see something happening, then I'll make a discretionary decision. Like if I start to see buyers just exhausting it, it's definitely not going higher. There's no more buyers in this area. I might even flip it. In fact, I would have been much more profitable by flipping on my target over the time and actually buying back in
Hmm.
my entry because it kind of tends more often than not, it's come down. 70% of the time it's rejected the target on in Q1. So this is something you can learn just from back testing and looking at the results you've had. Uh, But it's hard because instinctively it depends on the higher time frame as well. Because if this is an hourly reversal and it's happening on a daily reversal, and I can see that on the monthly chart is just bullish, I'm more inclined to leave some on because the whole market it wants to go up. So
Hmm.
if you got setups within setups, then I'm leave it on. But if I don't know what it's doing, I'll just take it all off.
Well, there was one guy in one of the Market Wizards books that he would like trade his core position, and then he said like, why would you not trade around it? Like when you if you're long and you know that there's a short term not like a
Pullback.
pullback coming, then set short the pullback, buy back when
Yeah.
it pulls back, and
Yeah.
I can't trade like that. It's just too stressful. I get so confused. Like, am I long? Am I short? What am I doing? Because then at some point,
Yeah.
what I'm okay, I'm not long or short. I'm long, and then I'm taking profits and reducing. So I just don't. For me, I prefer like what Jesse Livermore said. Like there are trends, and there are uptrends and downtrends, and obviously sometimes there are no trends. But when you're in a trade and it's trending, just fucking leave it, and that's it. That's why I like the whole thing. Like I'm not actually doing anything. Some point
Mm.
you catch a move, it's going. You don't know how far. That's why I also don't really like targets. I don't know how far it's going, and sometimes I have an idea and it goes further than that. Like because another reason why I like to talk to people who don't know about trading, you learn a lot. Like you learn either they have some really basic words of wisdom, or they totally talk shit, and you see why maybe your strategy is good. Like when I was first getting into trading, I would tell my dad about trades, and I remember I was in a trade. This was way back. I was like trading futures or whatever. I was trading gold because gold was volatile, and I got short, and it kept dropping, and it went down like two, three, four, five. And I told him, he's like, "What, five times a month? You should take profit." I'm like, "No, but what if it goes further?" And then a few hours later, it was like seven. He's like, "Seven? Fuck, take seven." I'm like, "But what? It could go 10. Take 10." And then it went to 15, and then it came back, and I ended up only taking six or something. And he was like, "Why didn't you
Yeah.
take 15?" And I'm like, "Yeah, but do you not remember that you said I should take five, and then
Yeah.
you said I should take 10?" So of course I didn't get the 15, but if I'd have gone with your thing, I would have only got five. Instead, I got six or seven or whatever. So I still got more, but it's a hard thing to deal with. But for me, it just yeah, it's still not easy. But I prefer that. Like I like the idea that you can't predict the market. You take what you're given, kind of thing. And many times you end up getting more if you're humble and you're like, oh hey, this looks like a profit zone, but I have no idea, and it goes further often. Especially on explosive moves, usually goes further than you think.
Yeah, absolutely. Just it makes mathematical sense to expose yourself to these fat tails. Why cut yourself short? It's it's the same with like again poker. You kind of got. Hold on a sec. Layla's fetching me another beer, but I think I'm good. I don't want any more. Trying to get me drunk. I don't know what she's up to.
She heard the whole backside V talk.
Yeah, she's getting excited, trying to seduce me. I've completely forgotten what I was saying now.
About capturing fat tails or something.
Oh yeah, yeah. It yeah. Obviously, if you add it up, you've got to think about all the situations together. Like if you take five every time, well, I mean, I don't. I'm preaching to the choir here. Is that the right expression? There's no point in trying to tell you
Yeah.
this. You know what I'm you know what I'm saying. But if you take five every time, you're gonna and you do it 100 times, you're gonna get 500, right? But if you let it run every time, yes, maybe half the times you're gonna go back to zero, break even, but also half the times you're gonna get 20. So do the maths. It's 1,000, I think. Half 20, not two. Yeah, it's not 2,000. It's half that. It's 1,000. So you've got double what you had if you're taking it at five all the time. So yeah, this is like you say, it's a kind of human psychological thing to snatch at profits, and everybody does this. Like, wow, they see the big green number and they want to snatch at it, but you've got to not do that. And conversely, they see the big red number and they say, ah, maybe it'll come back, maybe it'll come back, and they have hope when they should be fearful.
Well, that's the thing about fat tails, though. They can always be fatter than you think. It's a continuously moving game. So the biggest move in Bitcoin ever has been whatever X percent over a certain period, but it can always be bigger next time. I like
Yeah.
it makes it exciting, but also it's scary on the other side because you can experience in a sense like fat tails of consecutive losses. Like I know like I've only ever had 10 losses in a row before I get the win, but one day I could have 11, 12, 13, and then I don't know, has it changed? Like
Yeah.
it works both sides.
I
But
have to
that's a
definitely
different.
work on that. Yeah, I definitely cut myself short a lot of the time. I haven't done the numbers on it, but I definitely do. Yeah, I should. I literally sold. I mean, I probably if I was. I mean, it's hard to hold the trade for so long, though, isn't it? But I think I was. I think you were as well, kind of selling around the 55K mark in Bitcoin back in the day. I was
Yeah,
selling that area and targeting, and I took maybe 1,000 profit, like $1,000 movement. And of course, you could just let that run and run and run and run. But then you got to have the rules in place. This is a whole new area. Is trade management. You've got your rules for entry and for invalidation, but also it's kind of an invalidation rule, if you like. It's the trend is invalidated, but you've got to invalidate it on higher and higher time frames. And if you look at the structure, like the monthly structure held, or the downtrend, or the weekly downtrend structure held, but the daily and the 3 daily structure all broke. So you've got to hold through a massive pullback to continue, and that's hard to do when you've got massive.
yeah. I think that's why this is why I like studying options because then you've got to add in the time element. Time also has a price, right? If you're targeting something months out, it's more expensive because there's more volatility potential. The move could, you know, many things can happen and it can go up and down, it can come back. So in a way, like quicker trades are probably more probabilistic. But that's where I think the edge comes in. If you use fractals, you can
Mm.
catch a move on a short time frame that extends to a longer time frame, and then you've used the risk parameters for your shorter time frame, lower time frame, but you're like holding and trailing on a longer time frame. And if it coincides with whatever you look at, levels, volatility, you can catch a big move for cheap. That's the way I'm looking at it. It's like you're paying a price. Obviously, in hindsight, you can always say, yeah, like I sold the top, but you were never going to hold all the way through. Like it's no point thinking like that. But it's the other way. It's a double-edged sword too. Like if you always like if you never had a stop, then you would have blown up a million times, right? Because at some point you're gonna end up on the wrong side. It just runs. So Yeah, it's all about invalidation. I think that's the conclusion.
Yeah. Yeah, you need to have good ways to invalidate. Yeah. I'm planning on holding my current Bitcoin short for as long as possible because I do think it's
hmm It's interesting that we're both short and we're both short around the same thing. So we're both looking at the same level around 30K, or what was the
uh, it was around there, maybe even higher for me. I it was
yeah. But
I
you said
recorded.
you got you literally got the top. Like you said 31 or something. That's like to the tick. Or did I misunderstand?
I made a I made a video on the one that you found too boring to watch.
Oh yeah.
That was let me see. 30.5 was my first thir
30 point.
30,457.
Wow.
It was a daily reverse. It was my setup on a daily time frame basically, and it didn't
Okay.
go barely went anywhere higher than
Wait. What number again? 30,000.
30,450. I think I was in it a little bit earlier on my swing trading. I think I
So I've got a level marked off 30,422. Which I mean, it probably we're using different exchange. Well, this is on Bitstamp, I think, but um, that was based on those like equilibrium news event levels that I was telling you about.
yeah. Oh yeah, yeah.
So, and that's kind of my point that even though we have totally different, perhaps very in-depth ways of looking at it, we end up with the same fucking level.
Yeah. Yeah, so fuck TA. Doesn't just find something that works for you basically.
Yeah.